Give us your reaction about what you heard today.
Well, I think the committee is feeling its way along now. It's in a phase where, although it penciled in another rate increase, may not follow through with it. It depends entirely on how the data evolve and how they assess the situation in the coming weeks through year end. I also took away that they are signaling in their projections a higher for longer period. They've basically shaved 50 basis points off the year-end lower rate that they had projected in June. That, I think, is meaningful. I thought Chairman Powell was he sort of walked a tightrope. He didn't provide any really firm guidance. He really, as I said, suggested that they are just feeling their way along, deciding what's the appropriate stance of policy.
What does higher for longer, as a dot plot suggests, mean for the economy?
Well, it means that the interest rate level will remain higher into 2024 than earlier projected, and that if there are cuts to be made, in all likelihood, just based upon these projections, which can be revised again 2 or 3 times, but based on these projections, that if there are cuts that are likely to be in the back half of 2024 and possibly just in the fourth quarter of 2024.
It's interesting when you listen to Chair Powell, it's clearly that the realization of how complicated the territory that's being navigated at the moment, right? He said, as we heard just earlier, a soft landing is still the primary objective. He does also say that it is not the baseline expectation. How do you assess the likelihood that a soft landing or a no landing can be achieved from here on?
Well, I would say right now you have a reasonably encouraging set of conditions working. You do have gradual disinflation occurring while the economy is apparently growing at a very strong pace, well above trend, and looks like we're going to see that momentum fall into the fourth quarter of this year. And the employment markets are rebalancing. There's a lot, I think, that they would view as favorable circumstances that suggest that if they're patient enough with the disinflationary trend, they can actually do it without a lot of damage to employment.
Is a disinflationary trend at risk to you? Because I think it seems like there's not just sticky inflation that we've been seeing, but also perhaps new drivers of inflation, commodities inflation, the energy markets. We're watching, of course, the labour market organisation and strikes that we're seeing as well, potentially adding to wage inflation.
I think there is undesirable upside inflation risk, meaning that we could see either a very sticky inflation that just simply doesn't move for some period of time, or even inflation resurging in some respects. And what I'm keeping my eye on is energy prices, not just the headline energy prices of gasoline prices, which are important, but how energy prices actually course through the economy in the coming weeks and even months. Because even though there's this separation of energy and food in order to get a core measure of inflation, the reality is that there are energy prices in almost all goods and many services, and they are perhaps yet to be reflected in price pressures.